Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Most Asian markets, they've seen a bit of a bounce. Remember, yesterday, in fact, we did see a sharp sell-off.
The preference shares which have been issued are non-convertible, so they won't affect the equity dilution. I mean, the equity shareholder as such.
Okay, 75 as we speak. There goes the bell, and the markets are in a spot of green and building on it, actually. 0.5% higher.
This market is giving you a lot of opportunities from a stock picking perspective because there are lots of stocks that are down.
The export is clearing the desk for the sale by saying that payment schedule needs to be adhered to.
Well, steady as goes for the mid-cap index, so up around 1%. Bank Nifty also doing well, so a pullback coming in for the Bank Nifty.
Already approached the bank for an extension of the settlement, and the bank has agreed to take the extension to its board.
What they told us is that there is a host of measures which the company is looking at when it comes to improving the financials of the company. And the first one is sale and lease back of planes.
We had a gap up opening. We've held on to those gains, and as we speak, the benchmark indices are higher by close to about 0.8%.
Well, that's been the day so far. It's a solid Friday of trade, and right now the market is at the highest point of the day. This is Closing Bell. I'm Surabhi Upadhyay, and I'll have Prashant Nair join me in just a second. So the good news about today's trading action is that we haven't lost any momentum. In fact, if anything, now the market is sitting on a whole 100-point gain on the index. And today you can't complain. You can't say that the breath is bad or that mid-caps aren't performing. Or even within the Nifty 50, you can't complain of very narrow leadership or very narrow moves. Because what we've got on the screen is banks firing on all cylinders. We've also got some of the tech names like Infosys, TCS doing quite okay. Reliance is adding to the gains. So it's a pretty well-diversified move that we're seeing. Metals are having a decent session for themselves as well. So largely speaking, it's a wide variety of stocks that is moving higher. And on the mid-cap sides, of course, a couple of result reactions that have come through, like VIP, for instance, on the mid-cap side, Kaya, for instance. These were good numbers that the market has looked at. And, of course, the large-cap space, Titan, has had a rather sparkling quarter. So that's also a stock in news this afternoon. Good afternoon, Prashant.
Surabhi, hi. So, I mean, if the gains hold, the gains for the week are going to look pretty okay, pretty decent, actually. The Nifty, if we end with a 106-odd point, 100-point plus kind of gain, we'll end with about a 0.6% gain on the Nifty. Mid-cap index, if it leaves off where we are, would be up 1.7, small cap 2.2. Pharma index would be by far the best performing index across sectoral indices. Energy, 3.5%. Reliance, by the way, this week is up almost 5% again. So, I mean, you know, there's enough participation and leaders from across sectors are doing quite well. And it's not very concentrated. Nestle numbers at the bottom of your screen. There's a 10-odd crore beat which is coming through, a little over a 10 crore beat. So 395 crores in profits on Nestle compared to about 382 crores, which it was expected from Nestle's second quarter. Revenue has come in about 15-16 crores lower than what was expected. 2699 crores compared to about I think 2750 odd crores or so, which was the expectation. The stock has moved a little lower. None of these stocks are, they're all priced very finely. Stocks down 1.5 now, actually. So a little bit of sell-off coming through.
Spiking slightly higher now. That profit number is definitely ahead of expectations. And on the top line, we were looking at about a 13% increase.
Through a little over a 10 crore beat. So 395 crores in profits on Nestle compared to about 382 crores, which it was expected from Nestle's second quarter. Revenue has come in about 15-16 crores lower than what was expected. 2699 crores compared to about I think 2750 odd crores or so, which was the expectation. The stock has moved a little lower. None of these stocks are, they're all priced very finely. Stocks down 1.5 now, actually. So a little bit of sell-off coming through.
Spiking slightly higher now. That profit number is definitely ahead of expectations. And on the top line, we were looking at about a 13% increase. Now, what is the management saying? 2698 is what they've done. So top line, we have to really go and see where that slight miss seems to be coming in. Anyway, I'll give you some of the commentary that the management is talking about or the management is sharing. The market momentum continues to be favorable, and I'm pleased that we have sustained our broad-based volume growth across categories. This is coming from Mr. Suresh Narayanan himself. Kit Kat, Nescafe and Maggi continue to grow strongly in the market. They don't give a volume breakup of Maggi, so we don't have too many numbers to go in with. They're talking about their breakfast cereal launches, which took place recently. And
saying that we are now witnessing headwinds in commodity prices. So, I mean, that is from the statement of Mr. Narayanan that you read out. Apart from that, they're saying there's broad-based growth, etc. There's nothing to really complain about. We'll break up the sectoral performance, etc. But I would say these numbers are largely in line. But in line doesn't cut it for stocks like Nestle. That's the problem. It's down 2.5% now on Nestle. I mean, you know, 10 crores on this kind of base here and there, it doesn't really matter. So you'd say these are in line, perfectly in line. But I mean, as the stock reaction is telling you, in line isn't good enough. EBITDA at 645 crores. I mean, actually, EBITDA is about 15 odd crores higher than what was expected. And margins are 70 basis points higher than what was expected. 23.9% compared to 23.2 odd percent. So operational, operating profit, EBITDA margin-wise, etc., there isn't too much of a problem.
Okay, so the press release says that the total domestic sales were up 8%. So if I go by the company's press release statement, that 8% domestic sales number doesn't sound too great, because Mangalam has been telling us that the number should be at least in the initial double digits. The press release says that domestic sales were 8%. Growth rates adversely impacted due to lower reported sales by the change in structure of indirect taxes and reduction in realizations to pass on the GST benefit. So this is what's happened. They have had to pass on the GST benefit, which is why the sales number is not looking as robust as what the market had in mind.
Right after that, Surabhi, it says on a comparable basis, domestic sales growth is estimated. I mean, we should
if you
put
knock
that
off the
flash
GST impact,
is estimated at 14.5%, supported by increase in volumes on a base impacted by softer trading ahead of the rollout of the GST, goods and services tax. So we should actually put the management's estimation of what the sales growth, domestic sales growth would have been, I mean, on a comparable basis. So,
but you know, the fact is, okay, notionally, I mean, life can be notional and it can look very pretty, but the fact is that GST was a reality. They had to pass on these price cut benefits, or the tax cut benefits, I guess. And after doing that, the number stands at 8%, the domestic sales number. And that is something that obviously that's not gone down too well with the street right now. Stock is, I mean, it's kind of recovered a little bit because of the clarification that you pointed out, because volumes are fine. It's this GST pricing issue that perhaps has dampened the top line to an extent at least.
I think let's wait for Mangalam now to fill in the blanks with more details as he will in just a bit. But for now, we're down about 2.25% on Nestle. Okay, so Surabhi, why don't we tell us? Okay, I think Mangalam is with us now. Mangalam, go on. What else do you have?
The numbers, Prashant, the reported numbers look absolutely in line with estimates. No problems out there. The reason why the stock is correcting a couple. One, it was at a record high ahead of numbers. Secondly, you know, the management in the press release has written that the domestic growth is at 8%. So perhaps the street is a little spooked by that. But right next to that, they've also written that the comparable domestic growth is at 14.5%. So that is no problem, because the street was working with a number of anywhere between 11 to 13% in their domestic business. The 8% growth, that is, it's reported 8%, which includes excise duty in the base quarter as well. Adjust for GST, comparable domestic growth at 14.5% shouldn't be a problem. Just trying to take a look at the gross margin picture. The one that I calculated was close to around that 56.5% as far as the gross margins are concerned. We were expecting an expansion of close to around 100 basis points or thereabouts out there, and the gross margins have not expanded too much. So that is something we need to watch out for, whether the company has gone ahead and given some discounts or sent lower valued products or not. But the reported numbers pretty much in line with estimates. The stock is seeing a bit of a correction, perhaps because it was at a record high. Management commentary as far as the domestic growth is concerned, comparable growth is 14.5%, which is pretty much in line with expectations, if not a tad bit better.
Okay, all right, Mangalam, thanks
so just 1 minute. Mangalam, what does 14.5 mean? Like, what are they adjusting for?
They're
what are they
adjusting
saying?
for the excise duty, Prashant. So basically what happened was, last quarter, in the revenue that the company has reported, there is the excise duty which is included. Now this quarter, as the GST regime has been there over the last 3 quarters, the excise duty component is not reported in the net revenue. So the segmental revenue that the company reports is not comparable. Once you adjust for the excise duty in the base, the reported revenue growth looks a little lower. So once you adjust for it, the comparable revenue growth would be higher. So the reported revenue growth is 8%. Remove the excise from the base, the comparable revenue as for the company comes in at 14.5%.
Okay, all right, Mangalam, thanks so much for that. So that's Nestle right now down about 2% because of some of those niggling issues that Mangalam was talking about. If you're looking at the domestic sales growth for India for Nestle. All right, on that note, let's welcome in our guests on the show. How should you be looking at the last 1 hour? Let's get the technical trading strategies in first. Ashwini and Mitesh with us as always. Good afternoon, gentlemen. Ashwini, it's been a good day, but I'm sure, people will always argue that intraday, it's not something that's made you too much of money. But then still, how do you look at the solid 100-point up move after yesterday?
How come intraday you haven't made money?
Not as much as what some people would have liked. Perhaps if you'd opened much lower and then you would move to this 100-point century in the last 1 hour or so.
Bank Nifty opened up 150 points.
Yeah.
That's up 320.
Correct.
Nifty opened hardly 35, 40 points and that's up 100. If you still can't make money, then this is not for you. Okay. Now, having said that, is this the turn? That's tough to say because like yesterday looked spectacular on the downside, today is looking spectacular on the upside, and that often happens when you have lots of shorts. So I won't be very bothered if this is some sort of a range-bound market that we are entering into, where the upside is say 11,400, 450, downside is about 11,200, 250. A few days, spending few days here may not be a bad idea. What's interesting is that the corporate lender theme is back, and that should be right now considered a market leading theme. So whenever that starts to happen, the buoyancy is much more and the rally becomes much stronger. So that way, possibly even if you carry long positions till the end of the day, you will end up making money. If you want, you can carry to tomorrow and probably we should open higher. So that way trading the index is okay, but the stops become a little wide. But last hour, I think it's fair to remain long on Nifty and Bank Nifty. And on individual stocks, Axis Bank is now breaking out. That is the next participant in this corporate lending move. So this is a buy with a stop of 560, target of 582. ICICI Bank is a buy with a stop of 298, target of 314. And Delta Corporation is a buy with a stop of 264, target of 282.
Okay, Delta, ICICI, Axis. Ashwini, thanks for that. Mitesh, what would you be doing?
See, in fact, I also have a buy on Axis, incidentally. I think very clearly that big drop which happened after the breakout post result, I think that is done with. And we didn't see the stock get below its short-term averages, though it just tested them and bounced back from there. So I think it's regaining uptrend. I think it should head towards 588 to begin with, though 605 also looks attainable. It's more to try to buy it around 566 with a stop at 554. Look for 588 as your first target. And Jubilant Foods also appears to have completed a pullback and is gaining strength again. So buy with stop at 39 for targets close to about 1500 on the upside.
Okay, all right, gentlemen. Thanks for those trading ideas. Okay, we have some updates from on Mr. Mehul Choksi also coming in on the ticker there. Let's also welcome in Mr. Tulsian of sptulsian.com on the show. In a bit, we'll also have Dipun Mehta, member of both the exchanges, joining in. Mr. Tulsian, good afternoon, sir. Let me start with the numbers at hand first up. Let's take a look at Nestle and whether you at all would be, worried because of this India sales number. It's 8% because they had to pass on the GST cuts. At current valuations, how would you look at a stock like Nestle?
See, passing on GST cut is a set rule of the law. I don't think that should definitely get factored in. And even if I exclude the excise adjustment, because I have not been able to calculate it, because in the previous quarter of the previous year, the excise burden was only at 83 crore on a top line of domestic sales of about 2200 crore. So I don't know whether the domestic sales can be taken from 8% to 14% after making this adjustment, and even if it is presumed to be at 14%, excluding this excise duty, because this gives me 3.75% effect of the excise duty, even if I make this adjustment to make the comparable figures of the previous quarter, that is of June 2017 vis-a-vis June 2018 of this one. I don't know whether the volume growth will be seen at 14% or not. So taking these into account, I think the numbers are seen little disappointing, as I said, that 8% and 14%, because I have my reservations on 14%. So, and apart from that, the valuations of the, which I have been saying for last couple of weeks, actually this applies for all the richly valued stocks, that once you see the results coming in, you find them to be quite expensive. Even if I take the 175 rupees as EPS, the stock is ruling at a P multiple of 55, 57, which are definitely seen to be quite compelling, even if I compare with the other FMCG stocks, not necessarily maybe in the staple space. So going forward, things are, even if the stock, I don't think, I'm not saying that the stocks will collapse, but I don't think that you have upside potentials going forward on these stocks unless until all these FMCG stocks are ruling at a P multiple of maybe about anywhere between 45 to 50 or maybe 45 to 47 on the current year earnings.
Okay, lots of interesting stuff going on. I mean, Axis is a big move. Both Ashwini and Mitesh pointed out that they have buys here, 578 on Axis. Look at that one go. But one day it goes down because somebody is rumored to be, a candidate in the running in a credible way for the top job. Another day, like today, the stock is higher on news that somebody else. We reported that Amitabh Chaudhary, who now runs HDFC Life, is the front runner for the top job at Axis. Stocks up 30 odd rupees. So one doesn't know finally what the market will make when the final decision actually comes through. But Indiabulls housing has been up from the beginning, 6% higher. VIP reported numbers, strong numbers, is up 7.25%. Delta, another one of Ashwini's calls, 7.33% higher, so it's had a good going. Torrent Pharma has been up about 7%. RITES, that is the railway company, the consultancy, it's up almost 7% or so. Avanti Feeds is up 6%. And then you've got the PVRs and the Inoxes, which are up. Inox actually is up almost 16%. Mr. Tulsian, do you track this space, Inox, PVR, etc.? I think the case with regards to carrying eatables into movie halls comes up next week before the courts.
Prashant, I'm unable to understand that how can one preempt the outcome of the court verdict, because definitely I think this is going to get debated, hotly in the public domain, and even people wants that there should be allowability, or there should not be a restriction only of buying into the IMAXs or maybe in the multiplexes. So I think that going forward, this is going to remain as a hanging sword on the multiplexes, and taking that into account, probably I won't be taking, because I have been keeping a cautious call on, because if you really see the bottom line of these companies, mainly PVR and Inox, the major portion of that, or I would say that practically the entire profit before tax of these multiplexes are coming in from the food and beverages space only. And if you have any kind of restrictions coming in, either selling at a MRP or allowing the outside foodstuffs to be brought into the multiplexes, that will be seen definitely negative for these stocks. And once this spreads from Maharashtra to other states, this will definitely be having its impact.
Okay, that's PVR and Inox. Both those stocks are surging away today. The other one that's been consistently higher, as Prashant mentioned also, is of course Indiabulls Housing Finance. Good numbers, some very strong commentary from the management. So let's do a fundamental and a technical check on this. Mitesh, let me ask you first. Now, the stock is once again coming to the higher end of its recent trading band. Do you see a bigger breakout happening? I mean, how does it look to you on the charts after today's 6% up move?
In fact, I think there could be a bigger breakout, but for the timing, I would be tempted to take profits. Simple reason, I think last 3 weeks, the stock has done from about 1120 odd levels to about now at 1380. In fact, 1380 is the area where the stock peaked out in April 2018, and around 1400 we have a very important high in January 2018. So I think these are areas where you would expect, people who have been stuck at higher levels, this is the highest ever levels, might come in for selling their stock or taking some profits from the trading point of view. Given the area where the stock peaked out in April 2018, and around 1400 we have a very important high in January 2018. So I think these are areas where you would expect, people who have been stuck at higher levels, this is the highest ever levels, might come in for selling their stock or taking some profits from the trading point of view, given the fact that last 3 weeks has seen a good run up. But eventually I do expect 1400 to be crossed. So maybe a 1 to 2 week of consolidation, and I think from trading point of view these are good levels to take profit. But if we start getting past 1400, I would turn positive again and look for a 1600 kind of a target.
Okay, so on the charts, Mitesh is watching out for 1400 as a key level. Mr. Tulsian, how would you view this now? This is one company, loan growth wasn't a problem. In fact, when we're talking about higher cost of funds. They've actually, I think, expanded spreads slightly. And today the management didn't give any indication of any pressure, at least that right now they're facing on cost of funds. What would your take be on the stock?
See, actually, management is seen to be quite confident, and they've said that the 30% AUM growth, and that is enough to have a comforting call on that. And we have already seen that in the Q1 numbers. In fact, the part of the NIM pressure I've already seen in case of many NBFCs and the private sector banks, where the NIMs have contracted by about 5%, but that has not been case here in case of Indiabulls Housing Finance, when we have seen the revenue growth of 26-27% YOY basis, while the PBT rose by 32% and PAT rose by about 30%. So I have said this in the morning also, that if you have any kind of comfort of 30% growth to be seen in the performance on the bottom line, I think it is Bajaj Finance and it is the Indiabulls Housing Finance which is showing this kind of conviction. And generally, I have always maintained, in fact I have said in this last couple of weeks twice or thrice, that whenever the Indiabulls Housing starts moving up, it moves up swiftly. And actually Q4 numbers were not bad at all, but in Q4 to Q1, the stock has really contracted and consolidated quite a lot. And this time, because of this rally coupled with the management commentary, I won't be surprised to see the share moving to its all-time high, crossing its old high of 1440, which we have seen maybe, I don't know when, maybe a couple of months back. And we are in fact keeping quite positive stance because of the growth visibility to be seen for the next 3 quarters also. And to add the sweeteners, the dividend payout ratio is seen to be quite good. We have already seen first interim dividend of 500%. And let's not forget that the similar 3 interim dividends can get expected from the company along with every quarter results. That has been the trend with the company. So expect a dividend of anywhere between 1500 to 2000% as well for FY19, coupled with such a good performance, which may show an EPS of crossing 3-digit as well, of closer to anywhere between 100 to 105 rupees per share.
Fair enough. I mean, that's a comprehensive view on Indiabulls Housing. 2 other names, and usually they don't figure with large gains. When they do, there's not too much volume, but today there is volume. So AstraZeneca and Merck, if you can put both those names up, both MNC pharma names, and both of them up strongly. AstraZeneca is up 11 3/4 and Merck is up quite strongly as well. The other one is something like a Kaya, which is showing a 8.5% move. Again, just pointing out stuff with large volumes. There's enough else which is moving but not in strong volume. Kaya is up about 8.25%. Mr. Tulsian, any views on this one, Kaya?
Prashant, in fact, it's a very thinly traded stock and seems to be quite rich as well, because if you really see, so I don't think that,
Okay. Just another said, do you track Transport Corporation? I mean, this is the other one, which is Transport TCI Express as well. Any views there?
To me, Prashant?
Yeah. Yes, Mr. Tulsian.
Yeah, I do track, but now this, after this bifurcation of the divisions of this TCI's group into TCI Express, Transport Corporation, Gati, I don't think that the companies, all these companies are really able to capture the growth potentials which we have seen in the logistics space. And many new players have really taken over or, have eaten the market share, whether you talk of All Cargo or maybe if Future Group Logistics space, Mahindra's. So I don't think that you have much attraction or much kicker seen in the growth or the financial performance of the company of Transport Corporation.
Okay. All right, gentlemen, we'll take a quick break on that note. Markets holding strong and steady. It's a good day of trade and one that's entirely in positive territory right now. When we come back, we'll also introduce Deepan Mehta. He'll be joining us in the conversation. As we take this break, it's earnings season. We've been talking to managements across the board. Hear out a view from the management of Godrej Properties. They had a slightly weakish first quarter. Here are some key takeaways. We'll be back in a moment.
Last year, we were able to do over 1,000 crore each quarter. We would like to demonstrate that as an ongoing minimum criteria that we deliver, but it will depend a little bit on our ability to get launches done within quarters. I think one of the big reasons we slipped under that 1,000 crore mark this quarter was that some of the launches we hoped to do in Q1 have slipped out due to approvals not coming on time. So we remain confident of having a very strong year ahead.
How big has it changed, the migration to India has been, because we'll see other real estate developers also having to do this. How much volatility does it add to your earnings, and would you suggest that we look at important metrics like booking value over your P&L strictly?
I think there will be a lot of volatility and this lag effect. That said, I don't think there is any change to the underlying cash flows of projects. So there's no change, we think, to the ultimate profits recognized in a project, to the net present value of the cash flows generated from the project, and therefore no change called for in the strategy of the company in any way.
What's your outlook on demand going forward now? We know it's a sentimental thing, but we've seen major roadblocks like RERA, GST, etc. To some extent, they help solidify your position because we saw consolidation. Do you expect to see strong demand for your products going forward in this year?
The negativity surrounding the sector is very typical of a cyclical industry that is going through a downturn. But at the same time, I think good times will come back to the sector as well. It is, both in India and globally, a very cyclical sector. We've had now 5 or 6 years of downturn. Real estate is more affordable now than it's been at any point in the last 15 years due to interest rates being at almost their lowest level, although there's been a little bit of hardening in the last 3 months, of incomes having risen quite considerably over the last 5 years while property prices have been stagnant. So all of that, we think, lends itself well to the next leg of recovery, which we do expect to see sometime in the next couple of years, certainly.
The Nifty Bank is putting on some more weight and some more momentum. We've been talking about Axis Bank, which has been obviously one of the stars of today's trading action, almost 5.5% up. SBI is also now looking better and better, 1.5% up on that stock as well. Both of them close to the highs of the day. Well, on that note, let's now get in some more trading ideas. We have Sandeep Wagle joining in. Afternoon, Sandeep. Strong day of trade. What are you going with?
Afternoon, Surbhi. I have 2 buy calls. A buy in a Cumin, stop loss of 683, target 732. And a buy in NIIT Tech, stop loss 1278, target 1321.
Okay, so those are Sandeep's trades there. Deepan Mehta is also joining in right now on the show. You know, there is a stark difference in the two aviation stocks which are tracked pretty closely. Look at Jet and the way it is going. We reported on it in terms of their efforts. It's basically, back to the wall. There are 2 stories doing rounds. One, of course, is that they're looking to sell some stake. In the past, that kind of news flow has taken the stock higher.
And the news hasn't really materialized.
And the news hasn't materialized. But it's, on a day when you had news like that in newspapers, it's down 8%. And that is because it is paying attention to the story that we put out, which is the fact that they're actually trying to prune costs down to the bone because they've got backs to the wall. And a pretty tight financial condition. Indigo, if you can put that up, recent low was under 900. It's back. It's up almost 100 rupees from the recent low, and it's, look at that go, 990 odd rupees or so. I mean, first quarter, of course, 28 crores in profit, so laughable. But the question is, could Jet's problems be Indigo's advantage? There aren't too many airlines, are there? I mean, at least not in terms of carrying capacity or market share. Indigo and Jet between them is a large part of the market, would be what, 50% of the market. Mr. Tulsi, any thoughts on this?
I think, Prashant, if the stake sale happens in Jet, which is in fact seen possible now, because Naresh Goyal has been seen quite adamant with 51% stake and nothing has really, and if you take a valuation call on the enterprise value of sub 12,000 crore, because the debt is not very significant at 8,000 crore, and I'm referring of Jet and the market cap of sub 4,000 crore. Definitely that puts a quite attractive valuations, and if you take the market share of about 17-18% of the Jet, that can easily get ramped up to about 22-23% once the strong partners comes in. And we have been hearing this, that even Etihad wants to exit and their stake is likely to get bought by someone. And I don't know this time whether the promoters can really, escape from the, I'm not saying that the promoters have done any efforts, but the open offer can definitely then come in, because when the Etihad came in and they bought the stake, it was not, it has not triggered the open offer in spite of the management control seen with them having a stake of 24%. So I think the whatever damages which we have to see has happened in Jet Airways. In fact, now it seemed to have a huge value, and any dilution by the existing promoter coupled with the Etihad stake being bought by some other foreign airlines will definitely be seen positive.
But if you had to do something in this space, Mr. Tulsian, isn't the better thing to do by a dominant player?
No, I agree, but even in case of the dominant player, that is Indigo, you don't have the comfort after seeing the numbers of the Q1, the kind of fall. And I hope that it may be with the cleaning of the balance sheet, with the exit of the CEOs, which I've said, which generally happens, but even that is not a very good sign. So yes, I agree. But maybe that if I want to go in the pecking order, probably second candidate would be SpiceJet over Indigo in terms of the investment choice.
Okay. All right, Mr. Tulsian, we'll let it go on that note. Thanks very much for joining us on the show today. You have a great weekend, and we'll catch up with you again next week. By the way, NFL, National Fertilizers numbers were on your screen. The stock had been running up just a bit ahead of the numbers as well. Now it's rocketing up with an 8% sort of an up move. 15% is what they've done on the top line. More numbers will come for you as we go along. We have Deepan Mehta joining in. Deepan, thanks for being with us. Speaking of numbers, let's talk about the index big boy itself, Titan. Now, numbers look better than estimates on most counts. I mean, there's a decent EBITDA beat that they did as well, margin expansion that they've exhibited. Stock is still sort of, down in the doldrums, still down marginally. What's your view on Titan?
So I think we are positive on Titan for the long term, but I think this number, one more quarter could be a soft quarter for Titan. But clearly it's a strong secular growth story, and the way they are expanding their footprint in terms of setting up new retail stores, as well as now the uptick which we have seen in the other divisions, I think bodes very well for Titan. So I think that from a long-term perspective, one should remain invested in Titan and look for buying into it at corrections as and when they arise. But one has to keep in mind that maybe next quarter also may be soft for Titan, and therefore this kind of earnings volatility has to be taken in your stride. But over the longer period of time, it will turn out to be an outperformer, given the strong demographics and the momentum behind the company per se.
Surabhi, I don't know if he mentions Nestle, or maybe while we were on other stuff, Nestle is now down almost 5%. So it's a pretty large cut on a large stock. So $500 gone, 10,246. Deepan, did you have a quick chance to look at the numbers?
No, not really, but I think the stock has been rallying, and when you are rallying into the numbers, even whatever the numbers come out, even there's a minor disappointment, one does tend to see a sell-off, but need to look at the numbers more closely. But nonetheless, I think it's a blue-chip company, and the products in the segments that it is operating in, there's considerable headroom for growth in the sense that they're not mature products, and Nestle has got a very strong market position over there. So I would say that corrections, whenever they come into Nestle, are again good opportunities to buy into the stock, but I think valuation concerns remain, and one or two soft quarters may result in a minor sell-off as we have seen just now.
Ashwini, just looking at the way both Axis and SBI have moved today, I mean, Axis is just a little off the highest point of the day. Which of these two would be a better trade for you?
See, given that Axis has just moved today, it didn't really participate in the earlier rally, and because of this candid trend, if it's all going to work out, it could get closer to 620, 630. So, the stops are very close by on Axis. It's about 530, 535.
Which of these two would be a better trade for you?
See, given that Axis has just moved today, it didn't really participate in the earlier rally, and because of this candid trend, if it's all going to work out, it could get closer to 620, 630. So, the stops are very close by on Axis. It's about 530, 535, and the upside is probably still 60, 70 bucks. But overall, this resumption of rally shows that this corporate lending move still has more legs to go.
Okay, well, those are the two bank stocks that are having an excellent session today. Actually, there are a couple of other financials as well. Look at NFL, by the way. On that superb performance, stock is up 14%. Some strong operational numbers that this company has delivered. That's the one that I'm talking about. 60% up on the EBITDA. That is NFL for you. All right, let's welcome in our next guest on the show. Deepak Jasani, Head of Retail Research at HDFC Securities, is now joining in. Deepak, good to have you on Closing Bell. So first things first, let's get your lowdown on the earnings season so far. Do you think the numbers that we've seen give enough meat to take the market to even higher levels, or do you expect some sort of consolidation to now set in after the indices have scaled all-time highs?
Good afternoon. The Q1 numbers so far have been either in line or slightly ahead of expectations. But we will have to keep in mind that last year the Q1 was a soft quarter for most of the sectors because the GST destocking ahead of the GST. So we will ideally, for any meaningful comparison, we will have to do H1 comparison with H1 of last year, because Q1 and Q2 separately may give some distorted picture sector to sector. Having said that, we have seen volume growth in a lot of sectors like cement, trucks, consumer staples, and even credit growth. So banking and NBFC has done well. Margins were mostly in line for FMCG companies, but lower in cement, and even the banks have started to see some pressure on their NIMs. IT companies came out with good numbers, slightly beyond expectations, and asset quality trends in the banks have turned slightly better. Slippages have come down. Net, we feel that till the result season is out, say August 14, 15, markets may not sort of fall meaningfully. It may make new highs, but those new highs may not be materially different from where we are, about 100, 150 points in terms of Nifty. But the risk reward from these levels on a broader market is slightly adverse. So investing in broadly is not advisable. You have to go stock specific and slowly get a little bit into cash.
Okay, news on Jubilant Food. Promoters created pledge on 10 lakh shares out on the 31st of July. This is a small quantity from promoter holding perspective that we're talking about. The market, though, is zooming. I mean, look at it. We are at the day's high. The Sensex is up 1% plus. The Nifty is up 1% plus. That's 114 points on the Nifty, mind you. Futures are trading at about a 32 odd point premium. And everything is pretty much firing. So this is a good-looking screen. Something like Dewan Housing is also looking pretty good. I mean, so we spoke about Indiabulls Housing earlier, but look at DHFL, which is also indicating a pretty sharp move right now. Yeah, that's the one. Almost 4% higher, 626, and it's moved up over the last 15, 20 odd minutes or so, so to speak. Did you, Deepak, any thoughts on the Indiabulls number and in the housing finance space? You know, you can buy Indiabulls Housing, but you can also buy other stuff, not as expensive. Any thoughts? Yeah.
We don't cover Indiabulls Housing, so I may not be able to comment on that particular stock. But broadly, housing finance companies have shown a degrowth, have shown a slowdown in their growth rates, going by the early other companies' results. So one will have to be very, very stock specific. So within the NBFC space, I think housing finance companies may underperform vis-a-vis the other subsegments. So at this point, I think this is the view that we carry.
Okay, fair enough. Let's just go back to the screen for a bit. Where are we? We haven't budged actually. Market's holding on to all of its gains, so there's no problem whatsoever. There is some movement on Yes Bank. Yes Bank about 3% higher. Again, it's one name that's been strong since the morning. Let's just get the intraday graph as well. Okay, just a minor kind of a flick that's coming in. Ashwini, I just want to sort of, get your thoughts on leadership. And I'm talking more now from the point of view of how we're looking at next week. I mean, of course, your, trades, the BTST ideas as well. And just when we are looking at trade ahead going into Monday, then would you continue to play with financials, or let's say considering, something like Infosys has done well today, would it make sense to also keep positions on IT?
It's not only IT and banks. ITC is moving towards the high of the day. Reliance is, kind of correcting. So by rotation, things keep coming back. So that way, I think this is a market which is on a fairly strong wicket. Now you can see even midcaps, which are beginning to show large moves. It's a matter of confidence, and unless globally you get big shake-ups, and now people are getting used to every day there's trade war, there's that. There's nothing new creeping up on the horizon. So that way, there's not a market of 10, 12 stock leadership. There's a market which has several sectors which are now doing well. So I would think financials, FMCG and IT at some point will most likely catch up, because these bank stocks are also very strong stocks, and as Nasdaq comes back, IT will see upside.
How many zeros does a trillion have, Surabhi?
I'm not going to get into that one. I was actually writing it down just to see how big the number looks.
Okay, you know, in terms of single stock futures, we discussed a few of them, but look at, okay, let's put up Canara Bank, for example, 292, 4% higher. PNB is up 4%. You know, there's L&T Finance, which is up about 3.75%. So there is a fair bit of movement here. NIIT Tech is up 3.75%. So SRF, 3% higher. It's come up from almost 1500, 1550 levels, not that far back. So SRF is doing very well. And there is more. Vedanta, there's McDowell, there's UBL, there's United Spirits, I think, Manappuram, Gas Authority, Dr. Reddy's. It's a fair bit happening. Not quite at the day's high, a lot of them, but still decent gains. So pretty wide, broad-based kind of move. 120 now on the Nifty is where we stand at this point in time. Deepak, in terms of your clients, retail clients, what's the feedback really that you get from from your retail base that you interact with, especially with regards to mid caps and small caps?
Yeah, so basically the rise that we have seen in the market, if you exclude the last 3 or 4 days, has been very lopsided, with the large cap, 8 to 10 large cap stocks contributing the maximum to the Sensex and Nifty rise. Now, as we are all aware, retailers typically come in at the last phase of the bull run, and they typically focus on small and mid caps because they want a high alpha in a very short period of time. So this is a mistake that repeatedly make without doing enough due diligence. So this time this has happened to a much larger extent. The retailers have got stuck in a lot of small and mid cap ideas which they entered at the wrong time. Part of the reason could be the regulatory reason due to that ASM list or compulsory delivery in F&O stocks or whatever you can say. But all said and done, we have been sort of explaining to them and educating them that they will have to do a little more due diligence in terms of their own study and in terms of which brokers and which recommendations they should go by rather than just go by hearsay or just tips. So this is the broad experience that they have, and they are feeling a bit left out in this up run.
Okay, all right.
This IPO of HDFC AMC, I think, has brought back a little, yeah.
Okay, a little short on time, Deepak, so we'll have to wrap it up on that note. But thanks very much for joining us on the show. That's the view from HDFC Securities. By the way, lots of stocks on the move. Let's pull up Lemon Tree Hotels. Maybe it's the weekend. Maybe people are heading out of town. That's not a lie. You know, that stock is spiking away. And Dish TV. Anybody has TV viewing plans over the weekend? So these are some of the stocks that are doing really well in the broader markets. We take a very quick break. We come back with some trades for the last 20 minutes. Trades that you can carry forward and do a reverse action on Monday. We'll be back with that in just a moment.